Are you a well-qualified buyer with a great job, good credit, you have the cash to close, yet you seem to find that you still can't afford the monthly mortgage payment when you went to go buy a house? Well, you're not alone. In this video, I'm going to spend some time talking about ways that we can buy down your interest rate to bring that monthly payment into an affordable range for you. Let's jump in now. If it's your first time to the channel, I need you to subscribe or hit that bell so you never miss notification on what's going on in the market. I get phone calls and texts and emails every day from buyers just like you, just trying to figure out what's going on. Well, if you're in that situation, I'd love to chat with you today. Give me a call, shoot me a text, send me an email. All those details are in the description below. I would love to speak with you today and help out. Let's jump in now and talk about how we're going to buy your mortgage payment down and make it lower for you every single month. All right. So you may be wondering, what does it mean to buy my interest rate down and why would I want to do that? Well, the biggest driver on making a payment too expensive is the interest rate. And when they keep going up as they have been lately, it makes it harder to afford your home. So what do you mean? What does it mean to buy your interest rate down? Well, there's two primary ways to do that. One is a temporary buy down, one is a permanent buy down. So the first thing we're going to talk about is a temporary buy down program, which is more commonly referred to as a 2-1 or a 1-0 buy down program. The 2-1 is what I want to focus on because that's where you get the biggest bang for the buck to help make that payment more affordable. It's called temporarily buying your rate down for the first 2 years of your mortgage. It's still a fixed rate, which is really important to understand. This is not a variable rate program. We're not going back to 2008 with ARMs and everything else. This is a fixed rate. So how does it work? Well, it's really actually quite simple. What we're going to do is negotiate on your purchase contract concessions from the seller. Let's be honest, their home is at an all-time high value. They're going to make a lot of money when they sell their home. We're going to take a very small chunk of that. We're going to work with your realtor to take those concessions and we're going to apply them into a separate escrow account. What that escrow account is going to do is reduce your interest rate by 2% in the first year of your payments and 1% in the second year of your payments. So what does that actually mean? What it means is on a $400,000 house, we're going to reduce your monthly payment by $500 a month, every month for the first 12 months. And then by $250 a month for the entire second year, every single month. That is a massive savings of nearly $9,000 in those first 2 years. Here's why that's super important. If you look at what's going on in the market, you look at what's happening with rates, they're going to come back down. That is the nature of how interest rates work. It's the beauty of why you want to get into a house today and ride that equity wave, because the one common constant in real estate is that home values always go up. Even if there's a slight drop, they will always go up over time. And interest rates will always change. They will go up, they will go down, they will go even, but they're going to change. Even when they're up today, reducing them for those first 2 years can save you a ton of money, make that home mortgage more affordable for you as you ease into it, and we're going to come back and refinance you as soon as the rates come back down before you hit that third year and beyond with your full payment that is so scary when you look at it. So we just got done talking about a temporary buy down or 2-1 buy down. So what's the difference with a permanent buy down? Well, with a permanent buy down, what we're actually doing is taking money, seller concessions or your own money, and we are buying down your rate permanently for the entirety of your mortgage, often referred to as discount points. So you may be wondering, well, how does this all exactly work? Well, let me break this down into a really easy to understand example that I use every day with my customers. When you think about your interest rate, I want you to think about it like a ladder, okay? And on that ladder, there is going to be a midpoint where your individual circumstances, your credit score, the loan to value on your individual loan, the amount of income that you have, all of the things that factor into your specific instance are going to create a midpoint on that ladder. We call that midpoint the par rate or the note rate. That's important to you because anytime you get told a quote by any lender, by any bank, the very first question you should be asking them is that the undiscounted or par rate that you're telling me? I see customers all the time that come to me and say, Josiah, can you show me what all these charges are? And I find that sometimes loan officers are sneaking discount points into that offer. I had one just this week, $25,000 in discount points that were snuck into the loan to give that customer what they thought was a great rate at the time, but it was just it was a bought down rate and they weren't actually saving any money. Super, super important. Remember, anytime you get quoted a rate, the first question out of your mouth should be, is that the undiscounted or par rate? Okay, let's go back to the ladder for a second. So we have this middle point where you have your rate, your undiscounted par rate. Well, the beauty is on that ladder, we can move up or move down. When you move up, you're buying discount points, which equate to a percent of the actual loan. In most cases, you're going to be capped at buying at least 2 discount points to permanently reduce your rate. So if you buy 2 discount points, that could move your rate by 0.5%, sometimes even a full percent for the entirety of your loan. It's a great option to get a lower loan for the entire time, but it's going to cost you sometimes $10,000 to $12,000. But on the flip side, just like you can go up on that ladder, you can go down that ladder. And in that case, the lender is going to give you a credit to help with your closing costs. This is a great solution that we use every day when we have buyers that maybe don't have as much cash as they need to put down on a home. Being able to take a little bit higher rate, I know it's going to give you a higher payment, but the lender will give you cash that you can use to close on your house. That's why it's so important to work with the right loan officer, because our job is to figure out all of these variables to customize the loan that best fits your needs. Now, in this market, when you have rising rates, I'm going to tell you every single day, you should not pay for the discount points. And there's a reason why. So let me give you an example. If you spend $10,000 in discount points to reduce your rate and save maybe $250 a month on your payment, well, it's going to take 40 months before you recoup that investment. How do I figure that out? Well, you take $250 in savings every single month. Over 40 months, that's $10,000. So why is it so important? Why is that 40 months such an important number? Well, in a market like this, the likelihood of you having rates be this high 40 months from now is pretty slim. In fact, there's a pretty good chance that we're going to be able to come back and refinance you much, much sooner than getting to those 40 months. Now, if we refinance you into a reduced rate to save you more money before you've made it those full 40 months, you might have just wasted $4,000 or $5,000. I understand that some loan officers are going to tell you, buy the points, reduce your rate. That's not how I'm going to operate with you. I want to make sure that you're getting the most bang for your buck, making your money last the longest. I'd rather you take a little bit higher rate now and then use that money to really reduce your rate when we get the chance to refinance. So you may be wondering, well, Josiah, if you don't think we should buy discount points right now, then why are you bringing it up? Well, I do recommend buying discount points when it's not your money. Again, let's go back to seller credits. We're seeing these all the time in a more competitive market. Now, taking seller credits instead of taking a lower price point on the home are a great way to save you money. If you reduce the cost of a home by $10,000, you might only save $30 a month in your payment. But if we take $10,000 in seller credits from the seller, not from you, and use those to permanently buy down your rate, well, that we can make a big dent. We can make a $200, $250 dent in your monthly payment to save you money. And the best part about it is in lots of cases, we can actually combine both permanent buy downs with temporary buy downs to really accelerate your savings and help you get into a home with a monthly mortgage payment you can afford and still live life. All right, let's bring this thing back full circle. I threw a lot of information at you, a lot of numbers. Let me summarize this as simply as I can. We have 2 ways that we can buy down your rate. There's a temporary buy down, which if you remember, also called a 2-1 buy down, where we can use seller credits to reduce your interest rate by 2% in year 1 and 1% in year 2 before you go to your actual rate for years 3 and beyond until you get to the rest of your mortgage. Whereas on a permanent buy down, it's not going to be as big of a buy down, but you're going to see that benefit over the entirety of your mortgage, where we can use discount points to make your rate at a reduced rate for the whole length of your mortgage. So again, temporary buy down, 2% year 1, 1% year 2, permanent buy down, smaller percent, but for the entirety of the loan. So what's next? Well, it's real simple. I need you to go into the description, click on the calendar link, and book 15 minutes to give me a call so that we can talk about how to get you into a home with one of these buy down programs so that you can have a payment that you can afford and feel comfortable with. Look, I get it. It's scary out there. The headlines are scary. You see that monthly mortgage payment and it scares you. There is a solution, and it's my job to help find that solution for you and make it work for your circumstances. This is Josiah, Anchor Home Mortgage. I cannot wait to speak with you very soon.